Welcome back to our channel. Today, we're diving into the stock market's performance on November 4th, 2024, and exploring what this means for everyday people, not just Wall Street insiders. The Dow dropped significantly, while the S&P 500 and Nasdaq face their own ups and downs. With the US presidential election just a day away and a potential Federal Reserve rate cut on the horizon, there's a lot in play. Let's break it down step by step and see how these factors might affect you. First, let's talk about the numbers. Today, the Dow Jones Industrial Average closed down over 200 points, finishing the day with a loss of around 0.6%. That's not a small drop, especially with the election right around the corner. The S&P 500 and Nasdaq Composite were also affected, each dropping about 0.3% by the closing bell. What's interesting here is that all three indexes fluctuated throughout the day. At one point, the Dow was down more than 400 points. It's been a shaky day for sure, and it wasn't just about the election. We saw a small rally in some sectors like tech, with Nvidia climbing up by 2%. This jump happened after the announcement that Nvidia would replace Intel in the Dow index. That's a big win for Nvidia, which has been soaring in the artificial intelligence space. So, why does the upcoming election matter for the stock market? Right now, polling data shows a tight race between former President Donald Trump and Vice President Kamala Harris. According to Lauren Goodwin, an economist with New York Life Investments, the market is essentially pricing in a toss-up outcome. Since no one has a clear lead, the market is, well, behaving in a binary fashion. Exactly. If one party sweeps the White House and Congress, we might see significant policy changes, like new spending initiatives or tax reforms. But if we end up with a split between the House and Senate, it'll likely mean gridlock, making it hard to pass big changes. Investors are bracing for this uncertainty, and that's reflected in today's market performance. Another thing influencing the market is the Federal Reserve's upcoming decision on interest rates. This Thursday, they're expected to cut rates by a quarter of a percentage point. It's important to remember that the Fed's goal here is to stimulate economic growth, but rate cuts aren't always a simple fix. Right, interest rate changes can have a direct impact on everything from mortgage rates to credit card interest. A rate cut usually makes borrowing cheaper, which can stimulate spending and investment. But with inflation still a concern, some are saying the Fed might need to keep rates higher in the longer term to avoid overheating the economy. It's a balancing act, and for the average person, this decision could influence things like loan costs, investment returns, and even job prospects. The economy doesn't exist in a vacuum. It's all connected. Now let's look at some critical thinking here. Market volatility around elections and big policy decisions is common, but it doesn't always signal a long-term trend. As investors, it's easy to get caught up in the day-to-day fluctuations. However, it's essential to keep a long-term perspective. Exactly. Experts like Andrew Smith at Delos Capital Advisors note that even after the election, volatility might linger. We're dealing with broader issues such as global supply chain disruptions, inflation, and high interest rates that won't be resolved overnight. Investors often assume that the election will provide clarity, but that may not be the case. And for people investing for retirement or long-term growth, sticking to a diversified plan might be the best approach. Reacting to each dip and rally can make it harder to achieve steady gains. Certain sectors had notable movements today. Utility stocks, for instance, saw a dip after regulators blocked a request from Talon Energy to increase power output for an Amazon data center. Meanwhile, fossil fuel and solar stocks gained, alongside a 2% rise in oil prices. Then there's Nvidia, which saw a rally after the news that it would replace Intel in the Dow. Nvidia's stock is up 180% this year, while Intel has lost more than half its value as it struggles to compete in the AI space. This shift in the Dow is a big deal. It shows how central AI has become to the tech landscape. Treasury yields also moved today, reflecting a risk-off sentiment as some investors turn to safer assets ahead of Election Day. The 10-year Treasury yield dropped to about 4.31%, down from 4.36% last Friday. Bonds are often seen as a safe place to park money during uncertain times. For everyday investors, this drop in yield means that while bonds offer security, they may not provide high returns. With interest rates potentially declining, bond prices could become more attractive, but the yield might not be as enticing. That's something to consider if you're looking for safe investments right now. So why should the average person care about these market moves? When the stock market dips, it often signals concerns about the economy. These concerns trickle down into real-life impacts, like employment opportunities, loan rates, and even the price of goods. Absolutely. Take employment, for instance. If companies are uncertain about the economy, they might hesitate to hire or expand. Meanwhile, changes in stock prices affect retirement funds, especially those with 401k plans heavily invested in the stock market. That's why it's crucial to understand these market movements, even if you're not an active trader. And let's not forget inflation. If economic policies change due to the election, or if the Fed's rate adjustments don't curb inflation, we could see prices continue to rise, which impacts everyone's wallet. That's why these stories are about more than just numbers. They're about financial well-being. As we close out, let's remember that market uncertainty is part of the journey. Staying informed like you are right now is one of the best ways to navigate these shifts. Whether you're saving for a house, planning for retirement, or just looking to make smart financial decisions, understanding what's happening in the market helps you make choices that align with your goals. That's right. Staying grounded, diversifying your investments, and avoiding impulsive reactions to headlines can help create stability in your personal finances, even when the markets are anything but stable. Thanks for joining us. We hope this breakdown gives you some insight into today's market movements and why they matter to you. Remember, staying informed is key, especially with the election and Fed decision on the horizon. If you found this video helpful, please like, subscribe, and hit that notification bell to stay updated with the latest financial insights. And drop a comment below. How are you feeling about the market as the election nears? We'd love to hear your thoughts. Until next time, take care and stay financially savvy.